part 3 of this video series on trading gold futures. This is tapereading concepts. My name is Nikolai. In part 2, I explain the context, placement, and we follow the successful development of this short opportunity offered here midday on Thursday, or in the beginning of the regular session on Thursday. The opportunity was offered on a shoulder lower high with a sharp turn in price, and the projection was for a correction here back down to the base of confirmed support in the low to mid 70s. Since price left a lower high midday on Thursday as compared to the Wednesday highs, my expectation was that the pressure exerted towards this base here in the beginning of the Friday session or sometime overnight will result in a at least temporary collapse of the base or some event that will test the resolve of the buyers. Nevertheless, if we follow here the early beginnings of the Friday session, you will see that the situation couldn't possibly be any different than what I expected. We got a successful test and a retest of this base, and price reacted sharply without any compromise of the base. The price reacted sharply, broke at least a couple highs, more importantly broke the downsloping reference point that I've been following, and then after a little bit of follow through here almost to 1780, it pulls back to the backside of this reference point, just within grab of our 30 tick or $300 per contract staple buffer here within this market. That definitely would have been an opportunity I'm interested in. However, this is in the middle of the night, not my time zone, and therefore not something I could take advantage of. Well, such is the nature of the beast. We do have to rest. We cannot be in front of the screen for every single moment, and therefore every opportunity that might present itself. We have to rest so that we are sharp and focused and savvy decision takers during the next session as well. As we observe the orderly buying that transpires here within the European portion of the Friday session, the logical question the trader should be asking him or herself is, where is this market heading? As we refer to our market map from earlier in the week, there are two possible zones of interest. The first one is the overnight highs from Tuesday, and the second one is the double top highs of the week left by this island formation midday on Wednesday. I do discuss island formations along with all the other foundational structural elements that we use. I discuss these in detail in our mentoring community, tapereading concepts. If you're interested in joining, do let me know by contacting me at the email you see at the bottom here. In the morning, when I connect back to this market here in the market of the US session, which is right around 7 o'clock, we're already far enough from the bottom for me to be interested in continuation trades. Nevertheless, I will be following this progression to the upside, 40 tick pullbacks, nothing but higher lows and higher highs. And the first thing that I observe here is that the curve of the ascent is steepening as we near the first area of interest, and as soon as we get above it, instead of going parabolic, which is what I would have expected, we actually sharply consolidate here, a tight coil, horizontal action, and then price gets rejected to the downside with quite a bit of strength, somewhat reminiscing the island formation on Wednesday. This one is more of a chimney. There is a bit of difference, but they are sister formations, if you will. Despite the steep descent in price here during what I consider prime time for establishing positions or ideas within the US session, this is the time between 7 a.m. and 9:30 market open. Despite this steep selling here, there is no break of the last base here where price was considered fair and stable. We do consolidate here one more time. A bit of frequency develops here to the downside, yet there's no selling below the base, no follow-up here you can see, and we rotate back towards 1790. We test here right after 9 o'clock. Price again does cluster, somewhat similar to how it acted last time, and there's an orderly retreat here away from the zone. We do retest one more time, and this time the reaction is again aggressive. So definitely interesting price action, specifically here at the US Open at 9:30. Since both of these highs here left at the door at 1790 are lower than the initial rally here, the parabolic steepening that we experienced around 8:30, I do create a downward sloping reference point. And as we follow here the third and crucial attempt, we see that it also holds, and this is the point at which I was tipped over that crucial point of intent to look for the short opportunity. I did leave the order down the sloping reference point to get filled with my stop being well behind the very top established here, the selling interest that I'm observing here just before 10 o'clock. And if we consider the possible scenarios, we do have quite a bit of distance to the downside. At the very least, I expect that this now mature bullish progression will probably take out at least one layer of support. Therefore, I'm looking at a minimum of an excursion here to the low 80s, which by itself constitutes almost the full 3-to-1. And of course, price could rotate all the way back down to the next area of interest, which is all the way down here where we already know that the buyers are. However, I'm very sensitive to how price will be moving if I happen to be correct here. And while a few bars of a slowdown are definitely encouraging, because that's yet another lower high, you can see the second sloping reference point that I'm creating. And then a couple strong bars to the downside are suggesting that, well, we are going to attack these lows. Nevertheless, a bit of a slowdown here, a rather slow bar, inside bar, really pushed me towards considering the alternative idea. And what is the alternative idea here? We don't have a single low broken within this progression, and while it appears that there is a consolidation and some selling interest, without a broken low, it's really not much more than 50-50. Therefore, I decided in a rather skittish fashion to actually take that little bit of profit that I had here, just about 20 ticks, and then more importantly to closely follow the developments here in price. And since you can see that the next 10-15 bars definitely suggest a bit of a tug of war or a balance point or indecision, then my conclusion was that the next significant move out of this box here, roughly defined by, well, these lows here and possibly the highs here, right below the sloping reference points. Here's my energy point. So I decided the next significant move out of this pinch is likely to be in favor of the direction in which price is going to go next. I'm reading the tape very intently, bar by bar at this point. This is the prime time of the US session. You can see after 10:15, and the next few bars take price on a sharp V-shaped reaction to the energy point here that I have marked, and this is really where the sellers should show their hand if they're actually in control of this market. We did get separation here, as could be expected, and then a prompt to retest off of a marginally higher low here, double tops, yet price turns away for a second time. I decided that this local top here, yet again a lower high established within this box, I decided that this is a good reference point for a potential break to the upside, and therefore I left a buy stop limit order just above this box. This order would be filled only if price extends up there, and the expectation would be that once there, price will quickly accelerate to the upside and hopefully make a successful attempt on 1790 on its way here towards the 95 and change area. We did get a rotation to the downside. Now, since the sellers held the fort, it's their turn to show what they're made of on the way down, and a little more hesitation here inside the box. What follows is an attempt to the downside, and this is the first time that we get a few consecutive closes, not only below the box and below this momentary poke, but more importantly below the upsloping reference point established here in the latter portion of this upwards progression. And even though we're yet to see a significant low break, my conclusion here is that the ice is cracking, and therefore I'm leaning short. What I decided to do is to stitch together the position, which is to reestablish the short pretty much where I got out from the initial entry. In this way, if price continues to the downside, then I will virtually, for the cost of an extra commission, I will virtually be capturing the entire move if I re-enter at the point at which I exited. I did leave my order there, and despite a bit of a rally, I narrowly missed the re-entry, and it so happened that we never really reached either of the downward sloping reference points. Price accelerates immediately after the ice cracked here, and unfortunately, before I know it, it steps down 4 boxes here, which is 40 ticks or $400 per contract. Definitely something that could rattle even a seasoned trader, but I have learned to quickly compartmentalize the experience and just move on with my trading day. The most important question is always, what is the market doing right now? Because the next premise depends on the answer, on the ongoing answer of this question, and on the analysis that we can offer here as decision takers. As I observed the developments here around 1783, I noticed that price has already moved significantly away from both of my downward sloping reference points, and at this point I'm on the backside of this other frequency created a little bit earlier. Also, and more importantly, for the first time we see selling consecutive closes, good separation below the last base here established from the early morning from the US pre-market. So not only have I seen multiple lower highs here at an area of interest, but I'm already observing a lower low, and my assumption is that rather than working with these two downward sloping reference points, it's more likely that price will be hugging or transferring on the other side of this one. Therefore, as I observe the stubborn cluster of price here, this is another foundational structural piece or observation. It's called a compression pocket, and I did decide to place an aggressive short right here. If I steal one of these stop boxes here, you will see that the stop is not really hidden behind anything meaningful. So this is definitely a secondary premise that is rather aggressive. Nevertheless, I do believe that we have potentially seen the top here, and we're making a rotation to the downside. Now, naturally, the low 80s here are not going to suffice in terms of potential reward, so my commitment was to a rotation back towards the downside here, towards where the confirmed buying interest was, so that I can capture at least 3 times the initial risk that I am offering this opportunity. As I expected, steep directional development. Price started to oscillate around my reference point, and even though the volatility slowed down a little bit. For the most part, it was orderly selling on the way down here into the mid 70s, where I expected price to land, at least by the end of the session. We can see here around noon that we experienced another one of these structure observations. This is a V-shaped reaction, not the largest of patterns here, but nevertheless on the right side here there was a cluster of price on a slightly higher low, and I decided that here in the early afternoon this one has gone far enough, and I did take out the profits here. This one was, I believe, I don't see my marker, but just about 50, yeah, just about 5 points or 50 ticks or $500 per contract traded. So in effect, what happened here is that I missed this block between my exit and my re-entry, these 4 boxes or $400 per contract, and in effect my short idea played out, and I took 2 chunks of it, the smaller one here at the top, 20 ticks, and the larger one here for plus 50 to complete the idea towards the logical bottom. You can see this is a conservative, logical and safe exit, pretty far from the bottom. However, remember, this is a Friday session, and I'm not, for the most part, I'm not willing to carry over the position, especially with the systemic risk over the weekend. This trade was both planned and executed as an intraday trade, and it would have been roughly the same size winner as the previous 2 that we discussed in part 1 and part 2, just 100 or over 100 ticks here. With the 40 tick block here, I would have been looking at 110 ticks just to complete the idea here towards the end of the session. You can see that price closed well off the lows here, good, it seems $400 to $500 higher than the lows, and well off the base, so solid exit here for the opportunity. Overall, solid week, 343 with combined 280 tick profit for risking 30 ticks per opportunity, so almost a 10 handle week. This concludes this video and this 3-part series. Thank you for tuning in. This is Nikolai, Tape Reading Concepts. If you do have any questions, do let me know in the comment section below. I appreciate your support. Like, share, subscribe, and I'll catch you guys in the next video.